The most powerful unelected economic official on the planet is now facing a DOJ criminal investigation. But is this really about Jerome Powell and a building renovation? Or is it about an epic struggle for power and who controls money itself? And if the Federal Reserve is truly independent, why does it feel the need to keep insisting that it is? Because when institutions start defending themselves this loudly, it usually means something deeper is breaking. Today, we're going to step back from the headlines, cut through the noise, and talk about what this moment actually reveals. And why, you guessed it, Bitcoin sits at the center of the answer. Welcome to No Second Best, the show where conviction meets reality and where reality keeps pointing back to the same question. Should an unelected shadowy organization control money? I'm your host, Hurley. Now let's get into it. The Department of Justice has opened an investigation involving Federal Reserve Chair Jerome Powell, focused on testimony he gave to Congress about the cost of renovations to Federal Reserve buildings in Washington. Powell responded publicly, calling the investigation retaliatory and suggesting it's really about interest rate decisions and not construction costs. The DOJ, through the U.S. Attorney's Office in D.C., pushed back, saying this isn't political intimidation, that outreach was ignored, and that the legal process isn't a threat. It's accountability. Now, we don't need to litigate who's right here. That's not what this show is about. It's about finding the truth buried beneath the headlines. And the truth is, this isn't about Jerome Powell, and it isn't about the DOJ or even President Trump. The real story is what happens when monetary power collides with political power, and the illusion that these two things were ever separate starts to fall apart. Let's start by taking a look at the Jerome Powell statement that was released on Sunday evening.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned, in part, a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
If you listen carefully to what Powell is actually saying, you realize his argument isn't legal, it's philosophical. He's saying interest rates should be set by evidence, not pressure. By models, not politics. By experts, not elected officials. And on the surface, that sounds reasonable. But here's the tension. If the Federal Reserve truly isn't political, why does it wield total control over the price of money? Why does it decide who gets liquidity, when, and on what terms? Why does every crisis, every recession, and every emergency end with more power flowing toward the same institution? Independence sounds noble, but independence from who? Because independence from democracy is still power. And power, eventually, always becomes political. Now, this epic clash didn't begin with Trump, it didn't begin with Powell, and it didn't begin with the DOJ investigation. This is the inevitable result of a system where monetary policy stopped being a background function and became permanent crisis management. Every time the Fed steps in to stabilize markets, it gets pulled deeper into financial outcomes. Every bailout, every emergency facility, every round of quantitative easing. At some point, pretending that this is neutral becomes impossible, and it becomes clear that what we're really watching is credibility strain. And when money itself becomes the tool of policy, influence, and control, people eventually start looking for an exit. I just love this forward post from Pierre Rochard on X. He says, Trump should replace the Federal Reserve with Bitcoin. Amen. But what's interesting is that this isn't just a Bitcoin argument anymore. You're starting to hear the same concerns from people who spent their entire careers inside the system. Here's Treasury Secretary Scott Bessent a few weeks ago on the All In podcast explaining how this actually played out, calling the Federal Reserve the engine of inequality.
March 6th or March 8th, 2009 was the Fed began what we call QE, or large-scale asset purchases. They went in the market, started buying long bonds, and the theory of the case there is you create liquidity, you take safe assets out of the market, long-duration safe assets, and then the people who receive that money would buy more risky assets. Ben Bernanke famously said, when he was asked what's the purpose of QE, he told everyone, go buy equities. Well, not everyone could buy equities. So we ended up with like this two-tier economy where either you were an asset holder or you weren't. And the Fed definitely kept QE going for too long. And I called the Fed the engine of inequality. And someone said to me, well, do you believe that the Fed is responsible for economic equality in the system? And I said, absolutely not. That is not one of their mandates, but they shouldn't be exacerbating it. And they were the leading cause of it.
What Scott Bessent just described is the Cantillon effect. And this is where this excellent graphic from James Lavish becomes so powerful. Now let's walk through this. New money does not enter the economy evenly. It enters at the top. First, the Federal Reserve creates liquidity. That money goes to banks and financial institutions first. They get early access when prices are still low. They buy assets, they expand balance sheets, then large corporations and government contractors get access. They invest, they acquire, they grow. Asset prices rise. Stocks, real estate, bonds. Only after all of that do consumer prices start rising. Think groceries, gas, rent, utilities. And wages? Wages adjust last, if they adjust at all. By the time the money reaches everyday people, its purchasing power has already been hollowed out. And this isn't a theory, this is simply how the system works. And it's why inequality isn't an accident of capitalism, it's a feature of discretionary money creation. And speaking of James Lavish, I think this might be the best summary of the end game of this political theater. Lavish writes, nobody will be arrested. Nobody will be held accountable. The money will never be returned. They will just cut deals with each other, print more money, and act like it never happened. Wake up before it's too late and own something that cannot be printed into oblivion. This is why history matters. The Federal Reserve was created in secrecy on Jekyll Island. It was designed to centralize monetary power while maintaining the appearance of neutrality. Over time, that power compounded. Crisis after crisis, the mandate expanded. The balance sheet grew, the role blurred. And today, we're surprised that monetary policy feels political. It always was. Sam Callahan made an important point recently on a long post on X. Former Fed chairs and Treasury secretaries are suddenly warning that the US is starting to look like an emerging market. The irony is almost unbearable. The debasement of the currency, the monetization of debt, the backstopping of insiders, those weren't accidents. They were policy choices made over decades. You don't get to normalize intervention for 30 years, then clutch your pearls when the consequences show up. This moment didn't weaken institutional credibility, it revealed how fragile it already was. So the real question becomes simple. If money can be created at will, if access is unequal by design, and if accountability never arrives, what do? You opt out. Bitcoin isn't a protest sign. It's not a political movement. It doesn't require permission or coordination. It's voluntary. It's rules-based, and it removes discretion from money itself. That's why long-term Bitcoin ownership isn't about speculation. It's about responsibility. And at Swan Private, that's the focus. Real Bitcoin accumulation, real self-custody, and real long-term security. Things like multi-sig vaults, inheritance and estate planning, tax-aware strategies, and IRAs that don't compromise sovereignty and build towards the goal of generational wealth. For more information on Swan Private, visit swan.com/no-second-best. So this idea of opting out isn't theoretical. It's a conscious choice. And I think Simon Dixon articulates this better than most. Here he is on what Bitcoin did, explaining why Bitcoin isn't just an investment, It's the ultimate peaceful boycott.
How do you actually fight this system? The power structure of the existing currency is the Federal Reserve. If you want to boycott the Federal Reserve,
Buy Bitcoin.
buy Bitcoin. If you want to boycott the proof of weapons network, which the current CEO, because they manage about $12 trillion of assets, is BlackRock. If you want to buy BlackRock, don't buy the Bitcoin ETF. If you want to boycott the banks because they get to create the fiat currency, don't borrow against your Bitcoin. Don't mine fiat currency by putting it in custody and borrowing against it. If you can find a self-custody structure, then beat the system, fine. What if you want to boycott the military industrial complex, technical industrial complex, and financial industrial complex? Don't buy the S&P. Invest local. Invest in your local farmers. Purchase from local. Guess what? It's not poisoned either. The things that they want you to do are the opposite of what you should be doing. You should be eating good food. They even put you in this soya, psyop, vegan thing. Eat fresh meat from farmers. Purchase from local supply chains. Build your own communities. Because in a world where the government is being asset stripped in the West, which it is, this isn't getting better. I promise you, this isn't getting better. You don't get to rage wars around the world, rape, pillage, destroy, and not have that come home in the end. And that's the reality. So people then decide where they want to live. And I think it should all be about safety, where you can self-custody, and the rich want that.
So as I said before, the story isn't about Jerome Powell. It isn't about Trump. And it isn't about the DOJ. It's about what happens when a small group of unelected officials control the price of money for everyone else. When money can be manipulated, power concentrates. When power concentrates, politics follows. Bitcoin doesn't need to overthrow the Fed. In time, it will just make it irrelevant. And when money can't be manipulated, power decentralizes. And that's why Bitcoin scares every system built on control. But I want to hear from you. Do you think the Federal Reserve can ever truly be independent? Is monetary policy inherently political? And what does opting out actually mean to you? Let me know in the comments below. And if this episode helped clarify the moment, hit the like button, share it with someone who's still trying to make sense of this broken system, and don't forget to subscribe to the Swan Bitcoin channel for more high signal content every day. Thanks for watching, and remember, there is no second best money.